we're certainly going to be a busy week here for Wall Street. You've got a slew of important earnings results. You don't have to look any further than the results that we're getting from Apple and Amazon to highlight the importance of this week when it comes to quarterly results. We've got the Fed meeting. We've also got the jobs print on Wednesday. How does this set up, do you think, the equity action that we're likely to see in the coming days?
Well, I think it sets up where you've got the things that have tested the market, Mag 7 earnings, what the Fed's going to do, inflation, employment. You have all these things that are going to come at traders and investors this week. So, clearly the unemployment report is very important on Friday. And then the FOMC, we're not going to see any surprises there. They're not going to do anything. And, I think they've made it pretty clear the higher for longer narrative. So we'll just see how Chair Powell hammers that home on Wednesday at the press conference.
If that is hammered home, and the reality that investors have to really grapple with for the near term, perhaps even through December, is higher for longer, can the markets still see all-time highs even amidst that?
I have to admit, I was a little surprised when, you're coming into the year, the market's expecting 6 or 7 cuts. It drops to 3 or a touch below, and all the market did was set new record highs. So, I don't think that's really going to be the case from here on. And, we've got 2 cuts penciled in this year. If I had to guess on the timing, and it's a pure guess, it would be September, so it's far enough ahead of the election, and then December after the election. But certainly, if we're wrong, it's going to be fewer cuts, not more. So I think that, Chair Powell talked tough at the summit he spoke at a week or 2 ago, and I suspect that's likely to be the case because let's face it, whether you're looking at, if you're looking at core CPI, which is a percent above core PCE, or just CPI in general, it's way too high for the Fed.
Scott, when you take a look at some of the recent action that we've seen in the equity markets, you don't have to look any further than last week. You've got the S&P and the NASDAQ both coming off the best weeks that we've seen since November. I want to focus, though, on some of the movement that we've seen in tech, especially on the back of the results that we got from Microsoft and Alphabet after the bell on Thursday. How does that set up this week, just in terms of how much is relying on the Amazon and Apple prints and exactly what that's going to tell us about markets momentum here to the upside?
Well, these big growth names, they've been, for the most part, knocking the cover off the ball. But I think, from our perspective, as the market, when it was making record highs, when it was running up, you both mentioned tech and communication services. I mean, those two sectors look overvalued to us, and we've been trimming money from both of those sectors. But clearly, the market is going to hang at least for a few days on results from these Mag 7 companies. So we know what's been driving the market. It's largely these big names. Usually that's what carries the market into some sort of a top. But those results are going to have meaningful influence on what happens, at least in the short term.
And it sounds like from what's really propelled the Mag 7, that there's going to be more spending in the near term for those companies. So CapEx is going to rise. But for other companies that are really not going to be beneficiaries of generative AI hopium, what are they going to need to see within the consumer demand environments to prop their earnings?
Well, that's right. On generative AI, that's one of the reasons why we like industrials materials, because clearly to build data centers and a lot of other things, improve the electrical grid, industrial companies are going to do the building, and materials are going to be used to do all of that. Things like copper, we're seeing copper up a lot. But overall, I still think that these other companies, the spending we're going to see, we're going to be still doing a lot of deficit spending. Consumers who, in our opinion, they're nearly tapped out. They've gone to 401ks. They've tapped home equity lines. They've done all sorts of things, run up credit card balances. So consumer spending, we're expecting it to slow. It's clearly been strong, and certainly the GDP number had some strong spending in that. But we're looking for that to fade. It wouldn't surprise us if we had a couple of other, high 1 point something readings in GDP as we move through the next couple of quarters. So we think that infrastructure spending is going to be good, but consumer spending is likely to weaken a bit.
Scott, let's talk about some of the other moves that we've seen, specifically what's going on in the currency markets, because you've got the yen here, dramatic moves that we've seen to start the morning. A lot of that driven by some expectations, suspected intervention. When you see a dramatic move like we did this morning here in the yen, what kind of risk factor is this a risk factor here for the broader markets?
Well, I don't know if it's really that much of a risk factor for the broader market. When I look back, I was a market maker in dollar yen, and I quoted the Fed on intervention in 1990 to 1995, kind of the golden age of currency intervention. And I think that, these days when somebody like the Bank of Japan intervenes, they're more quiet about it. They don't announce it. But, they obviously have to intervene with traders. And so that's why you're seeing some news wires out that, the Bank of Japan did indeed intervene. They try to do it when the market's a little thin and everybody's leaning the same way, which in this case is long dollars and short yen. And so I think, as far as the currency moves here, the Bank of Japan, the fundamentals have to change. And given where their economy is, which is really not in a good place, you can't expect, rates to go up much there. So we would expect the dollar to remain strong. You don't get this kind of a move, a 4 yen move, probably without intervention. But I think probably, at least on a short-term basis, if the Bank of Japan did hike rates, that would have a negative effect probably on the overall market. But once again, the underlying Japanese fundamentals don't look great. And so, we're expecting the dollar to remain strong against the yen this year, and strong against the euro for that matter.